A very good afternoon, all of you. Hope you all are doing good. May blessings be upon you all. Welcome to Commerce second year class. In the last two classes, we are doing problems based on consignment. Okay, consignment. What is consignment? Consignment is a process where one party sends goods to another party to be sold on behalf of the former one. And the former is called as the consigner, and the latter is called as the consignee. The owner is called as the consigner, and the agent is called as consignee. And as per the paper pattern for IP, he will ask you to prepare ledger accounts in the books of consignor. So we were preparing three ledger accounts. A quick recall. What are the three ledgers we are preparing? One is consignment account. Second one, consignee account. And the third one is goods sent on consignment account. Goods sent on consignment account. These are the three ledgers we prepare in the books of consignor, right? And this is what will be asked in your IP. Okay. So we did around 4 to 5 problems in the last two classes. Today we'll take a few more problems, and we also will include the valuation of unsold stock. Valuation of unsold stock. Unsold stock is called as consignment stock. So we'll also take problems which include the valuation of unsold stock. Okay. The question 7, page number 81, Academy textbook, question number 7. On 1/1/2020, Balaji of Hyderabad consigned goods valued 50,000 to Shivaji of Solapur. Who is the consigner? It is Balaji of Hyderabad. And who is the consignee? It is Shivaji of Solapur. And what is the total value of consignment? It is 50,000. Balaji paid cartage and other expenses on 31/3/2020. Send the account sales with the following information. What is account sale? Account sale is a statement sent by consignee to consigner periodically, informing him about the gross sales, his expenses, his commission, and the advance sent. Okay, prepare necessary ledgers in the books of Balaji. Okay, so this type of question can be asked, where only ledger accounts in the books of consigner we have to prepare. So we are doing question number 7, page number 81. Who is the consigner? Balaji is the consigner. So this is consignment ledger. This is consignee ledger. Okay. We are preparing consignment account in the books of Balaji. We are preparing consignment account. You remember my shortcut, what I told you. 4 items on the debit side and 2 items on the credit side. What are the 4 items we take on the debit side? It is the goods sent on consignment. Total value of goods consigned, that will take. Then we take the expenses incurred by consigner. We write it as to cash. Then we take the expenses incurred by consignee. Who is the consignee in our case? In our example, we have consignee by the name Shivaji. So we have Shivaji, the consignee. This is for the expenses of Shivaji. Then similarly to Shivaji, this is for the commission payable to him. Then by Shivaji, this is for the sales made by Shivaji. And lastly, we have consignment account. We have consignment stock account, that is the unsold stock amount. Okay. So what was the total value of goods consigned? The value of goods consigned is 50,000 and the expenses incurred by Balaji are 2,400. So 50,000 is the total goods consigned to Shivaji. Then 2,400 are the expenses paid by Balaji towards cartage and other expenses. Cartage, if you remember, is a non-recurring expense which we have to include at the time of valuation of unsold stock. I told you 99.99% times the expenses incurred by consignor are of non-recurring nature only. Or I can go to a step ahead and say 100 times we can say that the expenses incurred by consignor are of non-recurring nature. That is, we have to include this in proportion at the time of valuation of unsold stock. Okay. Consignee, it depends. So while taking consignee expenses, we have to see whether the nature is specified or not. If it is specified, then only we will treat them as non-recurring expenses. If only expenses of consignee as such is given, we will treat it as a recurring expense and will not include at the time of valuation of unsold stock, right? So we have taken the total value of goods consigned, we have taken the expenses of consignor, then it is said that 3/4 of the stock is sold for 48,000. So 48,000 is the sale value of 3/4 stock. So out of the total stock, see, out of the total stock, if 3/4 is sold, this is a portion sold, right? So what is left? It is 1/4 is left. Out of the total proportion, if 3/4 is sold, what is unsold proportion? It is 1/4. So if it is 3/4 is sold, 1/4 is unsold. So this 1/4 proportion valuation we have to do, which we call it as consignment stock, because it appears on the credit side. As you can see, the consignment stock value, the unsold stock value will appear on the credit side of consignment account, and we have to do the valuation, okay, below the consignment account. Then Shivaji incurred expenses of 1,200. So see, sir, I told you, no, the nature of the expenses are to be given compulsorily. He simply gave Shivaji, the consignee, spent 1,200 rupees. So we assume that these expenses are recurring. As such, we will ignore them at the time of valuation of unsold stock. It is very much necessary that the nature of expenses are of the consignee especially are to be specified. If not, we assume that those expenses are of recurring nature and we will ignore them at the time of unsold stock valuation. Then the commission payable to consignee is given as 5%. Commission, I told you, is always calculated on sale value. Commission is always extended on sale. What is the sale value we have? Total sale value is 48,000. Take 5% of that, that would be 2,400. Okay, now what is left? Now we have to do the valuation of consignment stock or unsold stock. That I'll do here. Valuation of consignment stock. Valuation of consignment stock. Okay, valuation of consignment stock is to be done at cost price. Okay, it is to be done at cost price. Okay, so what is the proportion unsold? It is 1/4 unsold, no? So what I'll do is I'll take cost price of 1/4 stock. Cost price of 1/4 stock. What is the total value of stock given in the question? It is 50,000. So 1/4 of 50,000 would be 12,500. Hope this is understood. What is the total value of stock given? It is 50,000. What is the sold proportion? 3/4. Forget that. What is the unsold proportion? 1/4. 50,000 into 1/4 is 12,500. This is the cost price of unsold stock. Okay? Do we directly take 12,500 as unsold stock? No. What do? We add the expenses, non-recurring expenses of consignor as well as non-recurring expenses of consignee in proportion to the stock sold. So add proportionate non-recurring expenses of consignor. Add proportionate non-recurring expenses of consignor. That is 1/4 of, what are the expenses of consignor? It is 2,400. 1/4 of 2,000, that is 600. Okay. Then similarly, we have to add non-recurring expenses of consignee. But in the given question, the nature of expense of consignee are not given. So we ignore. I told you, no, specifically it has to be given what is the nature of expenses met. Okay. If the nature is not given, we assume that those expenses are recurring, and as such, we will not include them at the time of valuation of unsold stock. Okay. So now close. 48,000 plus 13,000, it is 61,100 on the credit side. Credit side we have 61,100. What is the total on debit side? 52, 53, 55, 55,800. So the consignment profit is 5,900. What is the profit on consignment? It is 5,900. If I'm right, okay, it is 1. It is 1. So 52,400, 53,600. This is 56,000. The total is credit side total is 61,100 and debit side total is 52, 53, 55, 56,000. So we have profit on consignment of 5,100, which we will transfer to the general P&L account of consignor. Hope this is clear. Okay. Very simple. 4 items on the debit side, 2 items on the credit side. 4 items on the debit side and 2 items on the credit side. Now we'll prepare consignee account. We'll prepare consignee account. Consignee account, we don't have to do, or we don't have to take any extra effort. We can directly prepare by taking the items from consignment account only. Right? This is our consignee account. Who is consignee in our case? It is Shivaji. So I am preparing Shivaji account. I am preparing Shivaji account. How do we do? We post it from consignment account only. Is any advance amount given? No advance amount is given. So all the items will appear from consignment account only. Okay. So how will they appear? Remember, no? If it is on the debit side, it will appear on the credit side of Shivaji account. If it is on the credit side, it will appear on the debit side. So this credit side item will appear in Shivaji account as to consignment. To consignment, 48,000. And this 1,200 will appear on the, again, credit side as by consignment, 1,200. These are the expenses. Again, by consignment, This is the commission, 2,400. Now balance it. Now balance it. 48,000 on the debit side. Write the same amount here. 48,000 minus 3,600. 44,400. Sorry. Yeah. 44,400. This is the final amount sent by Balaji. Okay, sent by Shivaji to Balaji. This is the amount due. Okay. Then, what is the last ledger we prepare? It is goods sent on consignment. The last ledger what we prepare is goods sent on consignment. So now let us prepare that ledger. Okay. Goods sent on consignment. Goods sent on consignment. Again, this will be posted from consignment account only. See this item. We wrote consignment account debit to GSC. We wrote consignment account debit to GSC. In GSC, this item is taken on the credit side as again by consignment. And what is the cost price? 50. This we will close by transferring it to trading account. 50. So 50 and 50. This is how we close the goods sent on consignment account. Okay. This is a complete structure which will fetch you 10 marks. Right? Done. We'll take one more question. We'll take one more question. Say question number 9. Question number 9. Okay. It is little different from all the questions what we have done. It is little different. So we'll take question number 9. Page number 82, question number 9. Naveen of Agra sends 50 TV sets, each costing 15,000 to Shravan of Warangal to be sold on consignment basis. Who is the consigner? It is Naveen. And who is the consignee? It is Shravan. He incurred the following expenses: freight 2,000, loading charges 2,000, insurance 5,000. All these expenses are non-recurring nature only. All these expenses spent by consigner are of non-recurring nature. Then Shravan sold 45 TVs for rupees 7,50,000 and paid 10,000 as shop rent. Shop rent is an expense paid by consignee. But is it recurring or non-recurring? Then the answer is it is a recurring expense. Shop rent we have to pay every month. So it is a recurring expense. So this item we will not include at the time of valuation of unsold stock. Then consignee is entitled for a commission of rupees 200 per TV sold. Assuming that Shravan settled the account by sending bank draft to Naveen, prepare necessary ledgers in the books of Naveen and Shravan. He is asking us to prepare the ledger accounts in the books of Naveen, that is consigner, as well as Shravan, that is consignee. But as I told you, he will never ask you to prepare ledger accounts in the books of consignee. So I'm not taking that. But we'll do one thing. In one of the problems, I'll show you what are the ledger accounts we prepare in the books of consignee. For your information, I'm telling you, we prepare only one ledger account in the books of consignee, that is of the consigner. I repeat, in the books of consignee, we prepare only one ledger, that is the ledger account of consigner. Okay, so we will be doing that in one of the problems. Okay, now let us start this. Naveen of Agra sends 50 TV sets costing 15,000 to Shravan. Who is the consigner? We'll do little working notes on this. Naveen is the consigner. He sent 50 TV sets at the rate of rupees 15,000 each. So what is the total consignment? It is 7,50,000. Goods sent on consignment value is 7,50,000. 50,000 into 15. Then he paid freight, loading, and insurance. All these expenses incurred by consignor, freight, loading charges, and insurance. All these expenses are of non-recurring nature. So these are to be included at the time of valuation of unsold stock. Okay, then 45 TV sets are sold for 7,50,000. Totally, how many TV sets are sold? 45, and the gross sale value is given as 7,50,000. He paid 10,000 as shop rent. Then he is allowed a commission of 200 per TV. So how much commission will he get? Commission. He'll get 200 per TV. He sold 45 TVs. So 9,000 he'll get commission. Is this clear? 45 TVs sold and per TV is going to get 200 rupees. So 9,000 is the total amount what he is going to get for the sales made by him. Okay. So now let us prepare consignment account and consignee account. Who is the consignor? In the books of, who is the consignor? Naveen. In the books of Naveen. I'll prepare only one ledger here. We'll take only consignment account. Okay. In the books of Naveen. Particulars, amount, particulars, amount. What is the ledger we are preparing? We are preparing consignment account. We are preparing consignment account. So what is the value of goods sent? 50 TV sets at 15,000 each. So 2 goods sent on consignment. 2 goods sent on consignment. 50 TV sets into 15,000, 7,50,000. This is the total value of goods consigned. Then the expenses incurred by consignor are freight 2,000, loading 2,000, insurance 5,000. 2 plus 2 plus 5, 9,000. Total expenses incurred by consignor are 9,000. Okay. Then consignee also incurred expenses of consignee sold 45 TVs. Consignee sold 45 TVs. Who is the consignee? Shravan of Shravan. Shravan is the consignee. He sold how many TVs? 45 TVs sold. At what price? The gross sale value is given as 7,50,000. Per TV price is not given, gross sales is given. Then he also incurred expenses of 10,000. Shravan made an expense of 10,000. Then Shravan is allowed a commission of how many TVs is sold? 45. And per TV is getting 200 rupees. So 9,000 is the commission, right? 45 TVs into 200. What is left? What is left is the valuation of consignment stock. Valuation of consignment stock. What were the total number of TVs consigned? 50 TVs. Naveen sent 50 TVs, 50 TVs. How many are sold? 45 are sold. So how many are unsold? 5 TVs are unsold. Right? So how do we do the valuation? See, when the numbers are given, when the units are given, valuation of consignment stock. Valuation of consignment stock. Right? Cost price of 5 TV sets. What? 5 TV sets. Sir, how come 5? Because 5 are the unsold. Out of total 50 TVs, total number of TVs were 50. 45 are sold. Unsold is 5. So, cost price of 5 TV sets. Okay, cost price of 5 TV sets. I'll take 5 TVs into cost of each is 15,000 given, no? So it is 75,000. It is 75,000. So will we take 75,000 directly as consignment stock? Then the answer is no. Because what we have to include? We have to include the non-recurring expenses of consignor as well as non-recurring expenses of consignee proportionately. So proportionate non-recurring expenses of consignor. Proportionate non-recurring expenses of consignor. 5 TVs unsold. Total TVs are 50 into total expenses incurred by consignor are 9,000. So 5 by 50 into 9,000. 5 by 50 into 9,000. Right? How much it will be? 900. Then, similarly, we have to add non-recurring expenses of consignee. But here also, I will not take those expenses because what are the expenses incurred by consignee given? Shop rent. Shop rent is a recurring expense. So recurring expenses we will not take when we are doing the valuation of unsold stock. That is why that is not included in the valuation of unsold stock. Okay, it is not included. We'll take 75,900. Note, expenses incurred by the consignee are recurring nature and as such are not included in valuation. Right? So 75,900 I'll take on the credit side. Now the problem is complete. 4 items on the debit side, 2 items on the credit side. See the total. 7,50,000 plus 75,000. 8,25,900. 8,25,900. What is the debit side total? 750, 759, 769. Okay, 7,78,000. 7,78,000. So it is 900, 7, 4, 47,900 is the gross profit. 47,900 is the, profit on consignment. 47,900 is the profit on consignment to P&L account. 47,900. Okay. Is it clear? See the valuation part. In the earlier 3-4 problems, what we did, he was giving the sold proportion in sold segment or sold this thing in proportion. Like half of the goods were sold, 3/4 of the goods were sold. That was given in proportion. So when it is given in proportion, like 3/4 is sold, so 1/4 is unsold, we can take that way. But when number of units are given, like out of 50 TVs, 45 are sold, then we have to apply this formula. Let us say we can draft a formula for this. What is 5? It is unsold stock. And what is 50? That is total stock. So unsold stock by total stock into total non-recurring expenses. This is how we can take the proportionate expenses. Unsold stock by total stock. Okay. Then what more we have to do? We have to prepare consignee account and goods sent on consignment account. Okay, we have to prepare consignee account and goods sent on consignment account. So let us go ahead with that. Consignee account, we don't have much. If you remember, we'll directly prepare it from consignment account only. We don't have to have any other entries. We'll prepare it looking at consignment account only. So this is our consignee account. Who is our consignee? It is Shravan account. Shravan account. Right? How do we prepare it? Wherever in consignment account, wherever we have the name Shravan, this will appear in Shravan account. If it is on the debit side of consignment, it will appear on the credit of Shravan account. So we have by Shravan, it is on the credit side. So that will take on the debit side as to consignment. To consignment. This is the entry on the credit side of consignment account as by Shravan. And when it is posted to Shravan account, it will come on the credit side. Similarly, we have two Shravan here. We have two Shravan on the debit side. And now when we are preparing Shravan account, it will go on the credit side as by consignment again. By consignment. How much was the amount? It was 10,000. The expenses. Similarly, we'll take the commission by consignment. Commission was 45 TVs into 200 each, 9,000. If any advance is sent, that also will credit. Check if any advance is sent by Shravan. Did Shravan pay any advance amount? No, it is not. No, it is not. So the balancing figure is the amount that Shravan will send to the consignor. 7,50,000 minus 19, it is 7,31,000. So this is the final amount sent by Shravan to Naveen. This is the final amount due sent by Shravan to Naveen. Okay. Now let us prepare goods sent on consignment account. It is the last lecture. Goods sent on consignment. Again, we prepare this looking at consignment account only. In consignment account, we have this item, no? Two goods sent on consignment. It is appearing on the debit side of consignment. Goods sent on consignment is appearing on the debit side of consignment. In goods sent on consignment, this will appear on the credit side. This will appear on the credit side as by consignment. And the total cost is 7,50,000. Trading account 7 lakh 50. Okay. So this is how the problem is done. Hope you guys are following all this. Please do practice. Sure, 10 marks. Okay. Then moving forward, we'll take 10th question because from 11th question onwards, we have a different method which is called as invoice price method. Okay, so we'll take one more 10th question and then we'll move to invoice method. All these problems what we were doing are based on cost price method. And what is the next method? Invoice price method. So we'll take those after doing this 10th question. So let us take question number 10. Akhil of Hyderabad consigned goods worth 20,000 to his agent Anil of Kamareddy. Who is the consigner? Akhil. Who is the consignee? Anil. Akhil spent 1,000 on transport, 500 on insurance. Both transport and insurance, both are non-recurring. Anil sent 5,000 as advance. Advance sent by consignee. It will appear only in consignee account. It will not appear in consignment account. It will appear in consignee account. Then half of the goods were sold for 24,000, of which 4,000 are sold on credit. See, it makes no difference for us whether the goods are sold on cash or sold on credit. What are the total sales given as? Total sales are given as 24,000. And it is said that of those 24,000, 4,000 is the value of goods which is sold on credit. It makes no difference for us. Simply ignore that 4,000 entry. For us, the total sales are 24,000. Enough. Whether they are sold on cash, whether they are sold on credit is immaterial for us. We will show the gross sale proceeds as 24,000. Selling expenses 1,200. Ordinary commission 8%, Del Credar commission 2%. Remember guys, in my first class, I told you Del Credar commission. It is a 2-marker also. Remember, it is a 2-marker also. I said there are 3 different types of commission given to consignee. One is ordinary commission. Second, Del Credar commission. Third one, overriding. Okay, so ordinary commission is a basic remuneration given to consignee. Del Credar commission is an extra commission given by consigner to consignee for taking the risk or responsibility of bad debts. If you write these 2 lines, you'll get 2 marks. Okay, and Del Credar commission is also calculated on total sales only, just like ordinary commission. Right? We don't have to make any separate calculation. Simple. What do we do is, what is the ordinary commission? Say 5%. What is Del Credar commission? Say 3%. We'll do 5 plus 3, 8%. We'll calculate on sales. Right? As we calculate ordinary commission, the same way we calculate Del Credar commission. So what I said was, if suppose ordinary commission is given as 5%. On what amount do we calculate? Always we calculate it on sales, total sales. Okay. Then Del Credar commission. Del Credar commission, let us say if it is given as 3%, right? This is also calculated on total sales. So instead of calculating separately, one thing we can do, we can sum up these two and take 8% on total sales. That is how we do it, right? So don't get confused. Nothing separate treatment has to be given for Del Credar commission. What do is, we simply add ordinary commission and Del Credar commission and we take it as a percentage on total sales. Okay? Then again, we have one more addition information. Bad debts amounted to 400. right? Bad debts amounted to 400. Okay. Normally, bad debt is a loss of consignor. Bad debt is the responsibility of consignor. But when del credar commission is given, it becomes the responsibility of consignee. In this question, consignee is being given del credar commission. So this bad debt is his responsibility. So we will not show bad debts in the books of consignor. I repeat, usually bad debt is the responsibility of consignor. But when we are giving del credar commission to consignee, it is the responsibility of consignee. So in the books of consignor, we will not give an effect to bad debts anyway. Clear? Chalo. We'll write these points also while solving the question. Okay. Now, so who is the consignor? Akhil. In the books of Akhil, we are preparing ledger accounts in the books of Akhil. Okay. So I always tell no, we take 4 items on the debit side. So what are the 4 items we take on the debit side? First one is two goods spent on consignment. Second, expenses incurred by consignor. Then expenses incurred by consignee. Who is consignee? Anil. Anil of Kama Reddy. Enough if we write Anil. Similarly, to Anil, this is for the commission. Credit side, we have 2 items. One is Anil, this is for sales, and then we have consignment stock. Okay, so we'll do one by one. 4 items on the debit side, 2 items on the credit side. 4 items on the debit side, 2 items on the credit side. Always remember this ratio, 4:2. So what is the total value of consignment given? You see 20,000. How much? 20,000. What are the expenses of consignor? 1,500. The expenses of consignor are freight and transport and insurance. I think. Yeah, transport and insurance, both are non-recurring. 1,500 will take you. Then Anil sends 5,000 advance. Okay. Advance sent by Anil will appear in Anil account. It will not appear in consignment account. It will appear in Anil account. Okay. Then half of the goods were sold for 24,000. 50% of the stock is sold. Out of this, 4,000 is sold on credit. I told you it makes no difference for us whether the goods are sold on cash or credit. Ignore. 24 is the gross sale proceeds. Selling expenses were 12. So Anil incurred selling expenses. Selling means recurring expenses. Then bad debts 400 and commission. Okay, how do we calculate commission? You see, calculation of commission. Calculation of commission. What is the ordinary commission given? Ordinary commission is given as 8%. Okay, ordinary commission is 8%. And del credar commission is 2%. Del credar commission is 2%. So totally 10%. Right? So 10% of 24,000, that is 2,400. So we have 2,400. Okay. So this is how we have to calculate. Simply add these two, take 10% on sales. Now let us see the valuation of unsold stock. Okay. What are we doing? We are calculating the value of unsold stock. Valuation of consignment stock. Okay, valuation of consignment stock. Out of the total proportion, half of the goods are sold, it is said. Half of the goods are sold for 24,000. It means the remaining half is still lying with the consignment. So we have to calculate it on cost. Cost price of half stock, half of the stock. That is half into, we should calculate it on cost. Cost is 20,000, no? So 20,000 half is 10,000. 20,000 half is 10. Then add proportionate non-recurring expenses of consignor. Again, that you should take in proportion. Unsold proportion is half. His expenses are 1,500. Half of 1,500. Similarly, we have to take unsold this expenses of consignee also. But here, the expenses of consignee are selling in nature. That is recurring in nature. So we will not take that. So we'll take 10,750 only. So the value of unsold stock is 10,750. And one more entry is given, that is bad debts. So very important, very important. Okay. I'll write a note for that. I'll write a note for that. Bad debts when del credar commission, when del credar commission is given to consignee bad debts will not appear in the books of consignor because that is the responsibility of consignor. So will not take. Now let us close this. How much it is? It is 34,750. Credit side total is 34,750. Debit side 21, 22, 24, 21, 22, 24, 24, 25,100. So 9,650 is the profit on consignment. To profit and loss account. See the solution? And see the working notes I have done. Now we have to take, we have to prepare consignee account and Goods sent on consignment account. Done? Achha. Now when we are preparing consignee account, what are the items? This one, this one, this one, and the advance amount sent. Remember, I wrote here, you see, advance sent by Anil will appear only in Anil account. So we'll have this item also in Anil ledger account. Okay. Okay. Gone through? Chalo. We'll take up Anil account. We'll prepare Anil account now. Particulars amount, particulars amount. Go through this. Debit item will come on the credit side. This also debit will come on the credit. This will come on the credit. Okay. So in a Anil account, I'll write to consignment 24,000, which was on the credit side of consignment account. I have taken here. Again, by consignment, this was on the debit side. I'll take on the credit side. What was that? 1200. Okay. 1200 I'll take here. Similarly, by consignment 2400, the commission entry I'll take here. Okay. And then I told why I wrote working note, no? Advance sent by consignee. Advance sent by consignee. It will appear only in consignee account. So I have taken it on the credit side. Right? Now let us balance and see what is the outcome. What is the result? $24,000 here. 24,000 here. Okay. 24,000 on the debit side and 8,600 on the credit side. Difference is 15,400. 15,400 by bank. This is the amount sent by Anil to Akhil. Amount sent by Anil to Akhil. Right? Then, what is the last lecture we prepare? It is goods sent on consignment. Okay. So, we'll close it. Goods sent on consignment. Again, this we prepare from consignment account only. See this? To goods sent on consignment. So when we are preparing goods sent on consignment, we'll take it on the credit side as by consignment. The total cost it is 20,000, and this is transferred to trading account of the consignor, general trading account of the consignor. Goods sent on consignment. Okay, so This is how the problem is done, completed. Okay. So, as I told you, we have a next step which is called as invoice price method. Okay. So, those problems we'll do later on. All these problems, what we did were based on cost price. The next step is invoice price. Okay. It is invoice price. Well, what is invoice price? It is obviously it will be above cost. It will be more than the cost. So when the consignor does not want the consignee to know what is the actual profit he is making, so what he will do is he will hide the cost price of the goods consigned. He will conceal the cost price of the goods consigned so that the consignee will not be able to make out what is the actual profit the consignor is making. Okay, so that price, let us say if the cost is 100, what he will do is he will add another 20% and tell that the cost or the price is 120. So here, this is the cost price and this is the invoice price. This is called as excess loading. It is called as loading. So how do we arrive at invoice price? Invoice price is equal to cost price plus loading. So we'll do problems based on this tomorrow. Today, we will conclude the session here only. You please do practice these problems. Okay. So take care. Goodbye.